Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
All right, here we go with the C Fund, aka the S&P 500. We're getting closer to that target of 5,500. Right now, we're bumping up against resistance, and that resistance is currently at yoink 54.49. So once we break that, it looks like we're going to go to that 5,500 area. For me, I'm just going to say I'm looking for reaction at that point. Uh, we have slight reaction here, and it's just a bumping up against that to come down. Once it breaks that though, we still have a little bit more room. Now, going in the weekly, since we've never been here before, there's a lot of area for it to go up. Now, the only reason I would be concerned with it further is because we have no information further on the left hand side of the screen. Everything now is brand new. With that being said, the strength of the market right now, currently, it is slightly overbought. Slightly. We are getting divergence here in our indicator. So you should know what divergence is. That's when the strength of the market is not in correlation with the actual price action. It's actually different. So what that means is here in our indicator at the bottom, the last biggest push was here in the strength of the market, and that was on March the 25th that week. Currently, and the week of June 10th, you'll see that the strength of the market is lower, but our price action does not match that. It is still going up. Uh, Once again, I'm just looking to see if it's going to go to that 5,500 area, and then I'll be waiting for a reaction at that point. It could be fundamental news, it could be technical, but we're going to wait for a reaction at that point. So, with the C fund down, let's go ahead and cover the S fund, aka Dow Jones. All right, so this one we're looking at almost the same thing, but the Dow Jones, if you notice, has started to do a pullback. Now, this pullback, this matches what we have in our indicator at the bottom. So the strength of the market is going down, the price action is going down as well. Um, for a bearish look, I would look for it to go. The next area is here at 1961. Then after that, the next area here would be at 1927. Uh, we have this is a big reaction candle here, and it's rejecting this area currently at 2038. We do have a demand area down here at the 1850 area. I'm looking for a sell here. Let's see where my moving averages are. Okay, so based on, I'm a moving average trader. I like moving averages. I use them as stops. I use them as entries. We would look, if you're moving averages like me, I'm looking at the 1891 because at that area I got a 200 and a 48 moving average there. I would look for price to come down. That also correlates with our level of support at 1889 or 1891. That area there is where I would look for the S fund to come down to, and then a reaction at that point. Now, if you're saying, I don't believe you, I think it's going to go up higher, well, the next area it had to break is this one. And it has to break it with a good amount of volume, a good lot of buying pressure, and that's at 2038. For me, I'm looking for it to come down because it just looks like it is, and it will complete an M pattern. At that point, it may consolidate and then go back up. But once again, that can depend on fundamental or it can depend on technical. It depends on what's going to be heavier on the market at that time. So keep an eye open, keep an ear open to what's going on in the world. This is definitely going to be affecting our TSPs coming up. So next, the let's go to the bond fund. I heard through the grapevine people were liking the bond fund, and we are getting a buy signal, and it is a strong green candle. So why did this happen? Well, they had I'm not even gonna say definite, but the Fed said that they might do that one rate cut. Now we had supposedly six that we were going to do this year. Now we're down to most likely one. Okay, so at this point we're breaking out of the channel. All right, we have a confirmed breakout of the channel, and it was strong. And it broke the last resistance of $97.54. We are now looking to get up to that 98.31. Once we get there, of course, same routine. If we have a big volume and we have a strong candle, or at least something that closes above that 98.31, we could say we're going to keep going up, and I would look for the last high, and I'm only looking for the body, so it's around $99. You could say 100 as well, but the price for the last high candle was 99.70. 99.70. That would be for the aggregate bond fund, aka the F fund. Now let's not finish up week. Let's go to that international. Let's see what the international, aka the I fund, is doing. It is tanking. It's going down, down, down. So we have just hit an area of support. There was a gap here as well in the F fund that now has been filled. Let's see in the daily chart. It was a very small gap, but also in the daily chart, the gap was mostly filled. It created another gap. So let's put it in here. And that's going to be from here to here. This gap now needs to be filled. So if you look at the weekly candle, for us, it looks like everything's good. It's filled up. In the daily, you may get some bounce around. So the next week, you may get some bounce around in here. You're going to look for a candle that closes below this one. If it closes below this one, that means we're going to be continuing that downward motion. And this is following the actual strength of the market. The strength of the market is going down. This is going down. Now, we have exited that channel a while ago. We went back up. It didn't enter the channel again. So what we can do is we can look at this and say, all right, where are we going? If we continue going down, but it looks like we already want to break this support here at 77.44. The next one's going to be 77 or 76.32. My next big one, if it fills down here, that's going to be at $74 range. I would maybe look for a re-entry here if you're into the international fund. But let's see what our algorithm is saying. Yeah, essentially that. Only reason I'm saying this area is because I have my 48-day moving average here. If it breaks that, the next area would then be the $72 range. Now, with this downward motion, the reason I'm looking at it, I haven't gotten a sell signal yet, but I have broken my 9 and my 14. So the next area for me would be the 48. If it breaks that, then the 200. Currently, it looks like I'm still kind of in a buy zone because I haven't broken this 50 line here on my indicator at the bottom. I still got a green background, so I'm still good, but I'm going to be cautious with the international fund. So that's the breakdown this week on Stock Shots. I hope you got something from it. If you liked it, put a like. If you watch it all the way to the end, hopefully you learned something. So we'll see you next week on our next episode of Stock Shots.